but you've had the benefit of about 17 minutes to go over some of this. What's your reaction to it?
I think it just reinforces the notion that the Fed's not going to be in a rush to cut rates. So the last couple of weeks, there's been a sort of change of view that the Fed rate cuts might materialize a little bit more slowly with less force, and I think that this just reinforces that. The economy is still doing pretty well. Looks like we're going to have growth in the fourth quarter of 2% plus. Financial conditions have eased a lot over the last couple of months. So I think that risks are that the Fed's going to keep rates higher for longer.
Bill, an unfair question. Why is the economy doing well? Is it productivity? Is it a follow-on of pandemic stimulus? What's the why of what we saw in Q3, what Atlanta GDP says about Q4, and maybe a few people optimistic about the first half of 2024?
Well, I think the biggest thing is that there were such large fiscal transfers that occurred during the pandemic that households and businesses are actually in pretty good financial shape for this late in an economic cycle. And so people have the ability to continue to spend. This is unusual. Typically what happens is people get over their skis, they're overextended, Fed tightens, and that actually bites quite a bit on economic activity. This time, I don't think people are as overextended, and so the Fed rate hikes have had less restraint on the economy.
Given that, Bill, and especially since you said the Fed's not going to be in a rush to cut rates, do you think that the market is still pricing in too great of a chance of March rate cuts if they're talking about a 50% chance right now?
Yeah, I do. I think May is more likely. If the Fed wants to cut rates, they've made it pretty clear that they view that as inflation falls, monetary policy is being tightened, and so that they need to follow inflation down. But to do that, they also have to get some signs that the economy is slowing sufficiently so that there's enough slack in the economy to bring inflation all the way down to 2% and keep it there. The wage trend obviously is something that's going to concern them. If wages are rising faster than 4% a year, that's probably not considered 2% inflation in the medium term.